Dear students, the last class we had discussed with the format of taxable income and tax liability. So here and we also discussed about the individual slab rate and went two simple problems in the last class. So we'll move on to the third, fourth and fifth problem of an again taxable income and tax liability. So we are discussing three problems of taxable income and tax liability. Continuation of the previous slides or previous video. So here the third problem, they have given an information about the P&L account and adjustment. So we'll see the problem here. So given below is the profit and loss account of Sri Rajaram for the year ended 31/3/2019. Particulars that the debit side they have given salary 7,000 rupees, drawings 8,000 rupees, to insurance premium on his life 1,000 rupees, depreciation 4,500, donation to recognized institution 500, general expenses 2,600, educational expenditure on his three dependent sons and inland 6,600, provisions for doubtful debts 1,500, income tax 2,000 rupees, then rent 1,700, net profit 25,200. Credit side, gross profit 50,000 rupees, interest on post office SB account 3,600, proceeds from life insurance policy 3,400, by interest on bank deposits FD 3,600. So total comes to 60,600. Notice additional information has been given here. Compute his taxable income for current year after taking the following information into consideration. The amount of depreciation allowances is 4,000. General expenses includes rupees 600 for his private expenses. Now, when you see the question here, which has been clearly mentioned about there are some admissible item, inadmissible item. So when you are computing your total taxable income, first and foremost, you should know what are the heads of income which is being given in the problem. So when you see the problem one, which gives a very clear information, they have given about the business income. So there are some disallowed expenses which has been given here. And then there is also income from other sources in the credit sides. So here, as we see here, when we talk about your what can be your disallowed when you want to compute your business income format, you should be very clear. So as we already completed there is a profit and gains of business and profession chapter. So here you have to compute your income from business. So the format it says very clearly the net profit as per the P&L account. So the net profit has to be taken into consideration. After that, for that you have to add all your disallowed expenses. When I say disallowed expenses, it can be that is a drawings is a disallowed. Then we have insurance premium on his life is a disallowed. Depreciation is disallowed because it has been given the adjustment about the depreciation when we see here amount of depreciation. Then donation to recognized project institution, and we have a general expenses. Now when we see a general expenses, in case if there is any adjustment has been given, means then that will be considered as an admissible 600 rupees. And then we have your educational expenses, provisions for doubtful debts, income tax, and then we also have the adjustment that is a private expenses which has been included. So we have to add all your disallowed expenses. So as we mentioned, we have taken a drawings 8,000 rupees, and we have taken insurance premium on life that is 1,000 rupees. So we have taken 1,000 rupees, and then depreciation 4,500, depreciation 4,500, donation 500 rupees. So we have taken donation 500 rupees, and then educational expenses 6,600. So we have taken educational expenses 6,600, and provisions for doubtful debts 1,500. We have taken provisions for doubtful debts 1,500. Income tax 2,000 rupees, income tax 2,000 rupees, and then we have taken that is a private expenses 600 rupees which has been mentioned in the adjustment. So these are all the disallowed expenses that should be added to your net profit. So 25,200 plus 24,700 comes to 49,900. Now from this, we have to deduct the expenses allowed but not debited. The one which is a depreciation which has been given in the adjustment, it's a 4,000 rupees we are deducting. So 49,900 minus 4,000, we will get 45,900. Now from this, less income credited but not taxable under the head. So which will be given in the credit side in the P&L account. So which are the item which has been mentioned here? So as we said, interest on post office saving bank account. So we have a 3,600. It's a non-business. It's a non-business income. So it is an income from other sources where we say. And then we have your proceeds of life insurance. We have that as a 3,400 life insurance policy. So that has to be taken. Interest on bank deposit 3,600. So we have taken interest on bank deposit 3,600. Now all this which will be considered as a non-business income, so which comes about other heads. So we are taking all these three, which comes to 10,600. Now 45,900 minus 10,600 will arrive at 35,300. So this will be income under the head profit and gains of business or profession. Now once we have computed with income from business, that is a one head of income. So we should check in the problem, do we have any other heads of income? When we talk about in this problem, one, we had a business income. We don't have any house property in this problem. And then we don't have any, you can say, income from salary. No. And then we have income from, we don't have any capital gain, but we have income from other sources. As we said, in the credit side, we had a interest on bank deposit, 3,600 we have taken. And then we have a post office SB interest. When we say post office SB interest, what is the amount has been given in the problem? Post office SB interest, that's a SB account 3,600. Now here we are not taking post office SB interest 3,600 directly here. Why? Because there is a rule which gives a clear information. Post office saving bank interest is exempt up to 3,500, and the rest will qualify for the reductions up to 10,000 as per the 10 TTA. So that is why. So 3,600 will 3,600 minus 3,500, which is an exempt amount we are not taking into taxable. So the remaining will be 100 rupees we are taking into consideration. So 3,600 plus 100, we will get 3,700. So now you are that is summing up all the heads of income. One, we have your business income, that is 35,300, and then you have your income from other sources 3,700, comes to total gross total income is 39,000 rupees. Now deductions under section 80, which qualifies for your saving, is 1,000 rupees, that is a ATC. So we have an ATC life insurance premium, so that we are going to take as a 1,000 rupees. And then we have one more, we call it as a ATG, that's a donations for qualifying. As we all know, donation which is being given in the problem is how much? 500 rupees, but it's a 50% is eligible for the recognized institution. So we are taking 50% of that. 500 is a 250, and the ATTTA, interest on post office is saving bank account, 100 rupees. As we said, whatever you are going to get this 100, you can claim a deduction. So here this is an exempted amount, and this you can claim a amount which you are going to have this income under the head which you have a post office SB interest. This you can claim for the reduction under ATTTA up to a 10,000 rupees. So that is why 100 rupees we are going to have here. So 100,000 plus 250 plus 100, you will get 1,350. Now out of 39,000 minus 1,000 minus 1,350, you will get 37,650. So this will be your total income. Now in this problem, they have given clear information what you're going to compute here. Computation is taxable income for the current year after taking into the information consideration. So only a taxable income that has been given here. So we are computing only the taxable income. That's a total income or a taxable income. In case if they have given a computation of tax liability, then you have to compute your tax liability. So that is why in the problem they have given only a computation of total income. So we have ended with the total income. So next, I hope you have understood this problem, and we'll move on to the next problem. That's a fourth problem where they have given an information about the salary as well as your house property, and then you have something called as capital gain, income from other sources. So then finally you will arrive, you have to compute from this information taxable income and tax liability. Now what's the information has been given? From the following particulars given below, compute the total income and tax payable of Mr. Debs, a central government employee at Chandigarh. So here salary 25,000 per month, that is TA bill. TA bill is a transport allowances bill 5,000 per annum. Actual expenditure 6,000 per annum. Bonus 25,000 rupees. As contribution to SPF, as a statutory provident fund, 17,000 1,700 per month. Employer's contribution to SPF 10% of a salary. Interest on accumulated balance of SPF at 13%, 12,000 rupees. Entertainment allowances 1,000 rupees per month. So these are the salary information that they have given in the problem. So we have to compute the salary. That in earlier problems, they are given directly the computed salary. So we have taken it directly. But when we see in this problem, we have to compute the salary, as we have already completed the chapter of salary. So next we have, he owns in two houses on which he is let out at a rent of 4,000 per month, and others whose annual value is 10,000 rupees remained vacant throughout the year on account of his employment at Ambala, where he has taken a house rent. The two houses are subject to municipal tax of 5,000 and 1,000 respectively. So this talks about your house property income. The third one, during the year he sold the shares of Hero Honda Limited and earned a short-term capital gain of rupees 50,000 rupees. STT paid, security transaction tax paid. He owed, that is a which talks about your capital gain. He earned rupees 11,500 as interest from government securities and bank interest on SBI fixed deposit 11,000 and on saving account 10,600. Then the last information they have given, he pays life insurance premium of 25,000 on his life policy of 4 lakh rupees. He deposited 10,000 rupees in home deposit account. Now, when we talk about in this problem, they have given a salary, house property, capital gain, income from other sources. Then directly we'll go to the solution where computation of total income of Mr. Dev for the assessment year 1920. So we have to compute the salary. Now what is a, when you want to compute the salary, what are the information they are given? That's a salary 25,000 per month. So we have to take on salary 25,000 into 12. So you will get a 3 lakh rupees. Then they have given a traveling expenses. That's a traveling allowances bill. As we all know, traveling allowances will be exempted. So traveling allowances is exempted. Next, we have an entertainment allowances. So what is an entertainment allowances? They've given 1,000 rupees per month. So here we are going to write a that is entertainment allowances 1,000 into 12. You will get a 12,000 rupees, and they have given a bonus. Bonus is 25,000 rupees. So we are taking bonus is 25,000 rupees. With this information, we are going to consider for income from salary. Then when you add all this 3 lakh plus 12,000 plus 25,000, so you will get 3 lakh 37,000 rupees. Now you might ask, there are some information which has been given for here where you're going to get a reductions for an SPF. So here we'll see as per this. So when we compute here, you will arrive at your gross salary. Then as the rule says that from gross salary less reduction under section 16, entertainment allowances, that's a 5,000 rupees which has been given. So when we talk about your entertainment allowances, very important point. So here I've given an explanation for your entertainment allowances. So here deductions for an entertainment allowances, government employee, rule says statutory limit is 5,000 rupees, 1/5 of 3 lakh rupees is a 60,000 rupees, actual entertainment allowance received is 12,000 rupees. Among these three, whichever is least will be considered as a amount for a can deduction. So 5,000 is the least, so that is why we have considered 5,000 rupees here. Entertainment allowances 5,000. Then we have a standard deduction. Always rule says standard deduction is 40,000. 40 plus 5, 45,000. So 3,37,000 minus 45,000, you will get 2,92,000. Then after that, we have to compute your income from house property. What is the income from house property? They have given in the problem there. So rent from, that is a rent of let out a house. They have given 4,000 rupees. So here, what is a let out of a rent is 4,000. So we are writing 4,000. 4,000 into 12. So you will get 48,000. So they have paid municipal tax. What's the municipal tax which has been paid for the let out? 5,000 rupees. So we're taking municipal taxes 5,000. So net annual value 48,000 plus 5,000, 43,000. Less reduction under section 24, always 30% of NAV, or that is 30% of 43,000, you will get 12,900. So you will get 30,100. The other house will be whatever the information which has been given. So we are going to see here they have given the other house which has been remained vacant throughout the year on the account of his employment assets, that is which has been taken for the house rent. So this will be an exempted. So that is why the other house which has been exempted as per the section 23 subsection 2, we are mentioned as nil here. So only one house we are going to say, that is 30,100. So next we will see the capital gain. What is the capital gain they have given? One is short-term capital gain 50,000 rupees. So here capital gain, that's a short-term capital gain on shares covered under STT, that is 50,000 rupees. So we have taken 50,000. Now we have income from other sources. Now what are the income from other sources? One, they have given a bank interest. The other one a government security. So what's a bank interest they have given here? Bank interest, they have given fixed deposits, and then they have given a savings account. That's 11,000 and 10,600. That is why 11,000 and 10,600 comes to 21,600. Then interest on government securities we have taken. What is an interest on government securities we have here? So 11,500. So we have taken 11,500. So 21,600 plus 11,500, you will arrive at 33,100. So total here, all the heads of income we have, that is one, we have 2,92,000. Then we have another one where we have income from house property 30,100, and then capital gain 50,000, and income from other sources 33,100. Total income is, gross total income 4,05,200. Now from this we have to make a deductions as per the section. So under section ATC, as we all know that contribution to SPF, it was a 20,400. So this contribution to SPF 20,400, the 10% of salary that we are going to consider. So that is why we have taken 10% of your salary. 10% of your salary will comes to 20,400. Then we have a, that is what is it, contribution, that is a life premium of a life insurance. Premium of life insurance 25,000 rupees they have given. So we have taken 25,000 rupees. 25,000. Then we have a contribution to home deposit account. We have given in the problem, home deposit account is 10,000 rupees. So we have 10,000. So 20,400 plus 25,000 plus 10,000, you will get 55,400. So this will be a qualifying amount for the deductions. But we also have a 80 TTA. As I said, interest credited in SBI account is restricted to a 10,000 rupees. Now whatever which has been restricted to 10,000, that will also where you can claim a deduction. So 55,400 plus 10,000 rupees, because of whatever you got an interest, so which you have got a deposit, so you can claim a up to a 10,000 rupees, you can claim a deduction. So that is why we are taking a 10,000 rupees where you can get a deductions for your bank interest here, whatever you have. So up to 10,000. So we are mentioning as 10,000 is restricted. So 54,400 plus 10,000, you will get 65,400. Now from this, 4,05,200 minus 65,400, the total income will be 3,39,800. So once we have computed with the total income, we have to calculate our tax liability. Tax liability, that is your total income 3,39,800. So for this, you have to calculate separately, as you know that the percentage should be a is a different for your short-term capital gain. So you are not using the slab rate. So your short-term capital gain is 50,000 rupees in the problem. So here short-term capital gain is 50,000 rupees. So 50,000 into 15% is 7,500. Now out of 3,39,800 minus 50,000, you will get 2,89,800. So here, out of this 2,89,800, always you should use a slab rate. The first 2,50,000 is a nil, and the remaining balance, what is the remaining balance out of 2,89,800 minus 2,50,000? So you will get 39,800 at 5%. So that will be 1,990. So here, what is the tax liability you will arrive here? So that is 7,500. You had one short-term capital gain, and you had that, what is the taxable income, 1,990. So he will get 9,490 rupees. Now, as a rule, so you have a rebate where you can get a reductions. Rebate under section 87, as your total income does not exceed 3,50,000, where you can claim a rebate. So here your income is less than 3,50,000, where you can get a rebate up to a 2,500. Only up to 2,500 you can claim a rebate. So that is why 9,490 minus 2,500. So you will get 6,990 rupees. For this, you should add education support person, that is on 6,990, 280 you will get. So 6,990 plus 280. So your tax payable will be 7,270 for this problem. So I hope you understood this problem. So here, very important, you should remember about your entertainment allowances. How you're going to have a limit. So at the statutory limit and 1/5 of 3 lakh rupees, and actual receipt, whichever is less. And then always interest credited on the credit balance in SPF will be fully exempted. So next, we'll move on to the last problem, where we have a last problem again, which talks about your computation of your taxable income and tax liability. Now here, from the following receipts and payments account for the year ended 31st March 2019 of Mr. Dave, from the further particulars given below, compute his total income and tax payable. So they have given the receipts and payment. So we'll see what's the opening balance. Their opening cash balance is 1,024. Consultations fees is 90,000 rupees. Salary from medical college 2,66,000. Short-term capital gain on sale of shares STT not paid 38,976. Interest from bank fixed deposits 23,200. Loan from a bank 10,000 rupees. Cash gift on son's marriage 10,000 rupees. Then payment side, by consulting room expenses 12,000 rupees, household expenses 1,72,000 rupees, cost of X-ray machine is 60,000 rupees, car expenses is 6,000 rupees, life insurance premium 22,000, son's marriage expenses 5,000 rupees, advance income tax 5,000, closing cash balance 1,59,200. Finally, we will arrive at 4,39,200. Now, when we see this information, we will see whether there is additional information is there. Yes. So here, half of the card expenses are treated as a personal. He deposited rupees 5,000 in PPF on 33 2019 and 10,000 in national savings certificate with 8th issue. Household expenses includes interest on loan of rupees 5,000 for purchase of office computer. He has insured himself for rupees 2 lakh on 1/5/2018. Now these are the information has been given. As we all know that we have given an information about the professions, that where in this problem itself you have to identify, so which will be your income from salary, which will be your professional, that you have any professional income. You can't say here a business, so you will get your professional income. Is there any capital gain? Is there any income from other sources? Now when we see here, so the first we can see here, salary, we have an income from salary, that is salary from medical college will come under income from salary. And then when we talk about your professional receipts, what can be your professional receipts? Your consultancy fees will be your professional receipts, and this will be what is you have your short term capital gain will come under capital gain. Interest on bank deposit again will come under what we say a income from other sources, income from other sources. So here we have your cash gifts. It is not a profession. Again, this will not come under a non-profession. These are all a non-profession. Where we have a credit payment side, when you see here, we have your consultancy room expenses. Again, it is related to your profession. And then you have household expenses. Again, it is a non-profession. But your cost of X-ray machine will be come under for depreciation, where you can claim for this for your machine which has been used for your profession. Car expenses, again it has been half is used for personal, half is used for the profession. Then we have your life insurance premium. Again it is not a non-profession, where you can claim a you can say a deductions, where you can get it here. And then we have your again son's marriage expense is non-profession. And then we have advance income tax, non-profession we have. And then we have your can claim PPF, where you can claim a deductions. So here again life insurance premium, where you are going to get the deductions here. Then you have your interest on loan of rupees 5,000 foreign, where you can see it has been used for the office purpose, so we can say as a professional expenses here. So from this information, where you are going to compute your total income of Mr. Day for the assessment year 1920. So as I said, see here income from salary. So we can say salary from medical college 2 lakh 66,000. So we have written 2,66,000. Now, when we computing salary, as we all know, always less standard deduction under section 16I, 40,000 will be, you can claim a deduction, that is by 2,66,000 minus 40,000, you will get 2,26,000. Next, we are going to have your professional income. That's a professional income. That's a receipt minus expenses. We have your professional receipts. One, we have your consultancy fees. Consultancy fees is 90,000 rupees. So we have taken consultancy fees is 90,000. What are your expenses? There's a consultancy room expenses is 12,000. So we have written consultancy room expenses is 12,000. So we have your X-ray machine. What is your cost of X-ray machine is 60,000. So here cost of X-ray machine is 60,000. For this depreciation, you're going to claim 50%. So 90,000 into 15%, you will get your 9,000 rupees. Now we have a car expenses. So car as be used for a personal as well as a professional. So 6,000 into 50%, you will get a 3,000 rupees, or 6,000 into half is allowed. Interest on a loan for office computer. What is office computer? We have 5,000 rupees. So this 5,000 rupees will be a professional expenses. So all this when you add, that is 9,000 plus 3,000 plus 5,000. Here you have one more expenses, 12,000. You will arrive at your 29,000 will be your expenses. So here out of 90,000 minus 29,000, you will get your 61,000 rupees. So here they have given a capital gain. What is a capital gain? Short term capital gain in the problem 38,976. So we are taking short term capital gain 38,976. Income from other sources, we have fixed deposits. What is your fixed deposits? 23,200. So we are taking 23,200 as a fixed deposit. So when you add all your income from ads, that is the income from other ads. So we have 2,26,000 salary. Then you have your professional income as 61,000. Capital gain 38,976. Then you have your income from other sources 23,200. So you will arrive at your gross total income 3,49,176. Deductions where you can claim under section 80C, that we have your 35,000 rupees. So here when we talk about your deductions where you can claim a 35,000 rupees. How does deductions where you can claim a 35,000 rupees? So here qualifying deductions under section 80C. In your problem they had given a life insurance premium. So what is your life insurance premium? LIC somewhere they had given. Yeah, 22,000 rupees. See here, when we talk about the computation, always rule says actual 22,000 rupees or 10% of sum assured of 2 lakh rupees, 10% of sum assured of 2 lakhs, whichever is less. When you do a calculations of comparing these two, you will get 20,000 rupees. That will be your life insurance. And PPF they have given in the adjustment, so 5,000 rupees that we have to write, which comes under 80C. So we have taken amount deposit PPF is 5,000 rupees, and then we have NSC National Saving 8 issue amount is 10,000. So we are taking national SC, that is NSC 8 issue 10,000 rupees. So what will be the total qualifying amount of ATC? 20,000 plus 5,000 plus 10,000, you will arrive at 35,000 rupees. So that is the information that we have written here, 35,000 rupees. So 3,49,176 minus 35,000, you will arrive at 3,14,176. For this, we are going to round it off 3,14,180, and you are computing your tax liability. Now 3,14,180, always we should know that rule, that is a slab rate that we are going to have, that is first 2,50,000 will be nil, and then the balance out of 3,14,180, the balance minus 2,50,000, balance will be 64,180. For that the second slab 5% you are going to say 64,180 into 5%, 3,209, and the tax will be 3,209, and rebate up to a 3,50,000, 2,500 can be deducted. So 3,209 minus 2,500, you will get 709, and your education says 4% should be added for 709. So you will get 709 into 4%, 28 rupees, and then here 709 plus 28, you will get 737 will be the tax payable, rounded off to 740. Now one very important point that you should remember, you might ask why we have not calculated short-term capital gain with the percentage of 15%. Why are we going to include in your total income slab rate when we are calculating here? So one main reason here, the short-term capital gain into 15%, why we have not taken, because the short-term capital gain on sale of share not covered under STT is treated as a normal income. So when you treat it as a normal income, you are not applying it that's whatever the percentage has been mentioned for the calculating. So this is treated as a normal income because it is not covered under STT. Hence the taxable slab rate will be applicable even for a short-term capital gain. So that is why I've given a note here. Short-term capital gain on sale of share not covered under STT is treated as a normal income. Hence, taxable slab rate will be applied for your short-term capital gain in this problem. So I hope you have understood this problem. So here, with this, we have completed with the last chapter of the taxable income and tax liability. Again, in case if you have any doubt, you put a message to a Google Classroom. We'll solve or we'll rectify the particular whatever you have a queries. And I hope you have understood all the concepts which we have done so far. And thank you once again. Stay at home, stay safe, be care for you, be care for your future. Thank you.